Nobody's rebuilding Salesforce, if you will. Okay, nobody's
Right.
saying, hey, let's rebuild SAP and then we'll build our front end. Like nobody's doing that. I think for core banking, it's the same shift is happening as well.
Hello and welcome to 11FS Fintech Insider Spotlight. I'm David Barton-Grimley, Fintech Strategy Director right here at 11FS. And on this show, we shine a spotlight on the best and brightest in the tech and financial services industry to get to know them, their businesses, and what they think the future of the industry will look like. On today's Spotlight, I'm delighted to be joined by Martin Della Chiesa, CEO of Skaleet, a Paris-based company helping financial institutions around the world reimagine their core banking infrastructure. Welcome to the show, Martin. How are things going?
Thank you, David. How are you? Good to be there.
Yeah. Welcome to our dungeon, our recording dungeon. And on this show, we're going to be talking with Martin today about what's driving the urgency for change, how Skaleet makes modernization less daunting, and what opportunities await the banks that take the leap. So without further ado, let's go into it. So Martin, kick us off. Tell us a little bit about you, your background, and Skaleet.
Absolutely. So I'm the CEO of Skaleet. I've been running the company for the past 18 months. I've been around financial services for the past 13 years or so, looking at this from a different perspectives, as well as an investor, board member, an operator, as well as a consultant, and now as a CEO. And really at Skaleet, what we do is we provide next-gen core banking system to both disruptors and banks. And essentially, the role we have in the space is to help those companies either start, scale, or modernize their financial services operations for the better.
Amazing. And what would you say the types of customers that you typically work with?
So we work for very large banks, tier one conglomerates, such as BPC Group, Postbank, and so on and so on. We also work for disruptors, listed companies such as United, which recently IPO'd in Europe. We work for a variety of corporates as well, either entering the financial services space or scaling up their operations, like FDG United, huge European lottery business, which recently leveraged its physical network to launch a financial services offering. And in order to do that, they need a tech backbone, and we are there to help for that.
Amazing. So like across the board, that's so many banks and brands and fintechs and different...
Absolutely.
Pretty much everything.
We serve about 30 logos in 15 countries across, as you said, the globe. But in fact, the real strategy we are going after is to build a pan-European leader for tech backbone in the financial services space, because we believe there is such a big opportunity for the whole continent to enter modernity. And that's what we are focusing on.
Yeah. And so let's talk about that tech backbone and the opportunity and challenges. So what were some of the challenges that, Skaleet is set up there to solve? What are some of the problems that you see in modernization?
Yeah, so I think the most, I would say, stringent problems we are solving for, if I take the example of very large banks, is that for a while, they've been looking at the emergence of disruptors, like, okay, let's see how it goes. And I think now situation is changing rapidly. If you think about Revolut, for instance, in France or elsewhere, when those guys are able to acquire more customers in a month than what they do with the entire physical network in a given year, it starts to pop up as a huge strategic issues. And then all of a sudden, technology becomes not a CTO topic, but a CEO one, which is how do I catch up with those guys? And therefore, how could I launch new offerings? How do I modernize my channels? How can I be just more relevant and competitive in the marketplace? And do I have the right tools in order to do that? So that's what we are solving for. And in a way, I see the banks, the trad banks in Europe, being more and more in a do or die kind of mindset, to rephrase Carlos Ghosn strategy with Nissan in 1998. And that drives a lot of demand and adoption for products like ours.
So it's getting real now. It's not just a question of saying, oh, maybe there's something we need to do here.
Yeah, it's not a maybe.
This is urgent.
It's not a maybe anymore. I think it's a yes. Now the question becomes like, how do we go about doing this?
Yeah.
And this is where all of the risks legitimately pop up. And in a way, we are more operating as a risk managers in some ways. because nobody wants to risk a huge failure for a variety of legitimate reasons. And at the same time, there is no alternative but to move forward.
And so what would you say then is that balance of how? What are the things that you do and what the kind of future of modernization looks like that banks and fintechs and small credit unions need to do? Is it modularity? Is it moving faster? Is it what is that thing that you think needs to change?
I think it really varies depending on the personas and the segments we are talking about. I think in terms of the biggest banks, which are huge groups, I'm talking about tier 1, tier 2 banks in Western Europe in particular. I think for those guys, it's really about launching something new. And in a way, the best way to have a shot to modernize is to start with something else.
Got it.
Because the timeline you have from a strategic standpoint is not the timeline you can hope to modernize the entirety of your backbone. It will take probably a decade or two to modernize the whole thing. The problem is that your competitors are talking in months, if not weeks. And so therefore, there is a huge disconnect between what you can expect from a massive IT transformation relative to the strategic urgency that you are facing with. And so the answer we have is really like quick time to market. You need to act quickly, strategically, set really clear business objectives, and how can you meet those business objectives with a quick time to market from a tech backbone standpoint. This is why we are trying to be extremely close from the end product in order for the CEOs to be in a position to launch new things in a timeline that fits with the extent of the threat they have. Now, if you talk about the smallest banks, which is where we focus a lot in terms of the replacement, I think there you have a much more radical kind of decision making to make, which is like, how can I just even survive in this world? Customers are churning, economies of scale are not there. Any new regulatory changes become a huge burden in terms of execution, whether it's instant payment, whether it's new reporting deadlines, whether it's VOP, and so on and so on. Like every month there is something that pops up, and the system is just not designed to do that. And your ability to transform with a lot of cost is just not there at the same time. So I think those banks are stuck, and therefore it's not about modularity. It's really about sunsetting from legacy to modernity. Plain and simple. I think that's
rip it out.
Rip it out.
Start again.
Just rip it out.
Right now.
Rip it out.
Otherwise you'll die because you're seeing.
Otherwise you'll die.
Yeah, your customers. They're telling you that their customers are leaving, right? Because they're going to Revolut. They're going to what?
Exactly, and at the same time, because those banks are way smaller, governance tends to be a bit easier. Migration risks tend to be as well lower, and so therefore you can hope to achieve your migration done with confidence in months. I'm not saying it's 6 months, but between 12 months and 24 months, you can achieve something really, really nice. And therefore, you can go in that direction while remaining relevant in the market, which is very different from the huge tier 1 banks, which have a little bit more time to change the whole cargo ship, if you will, but need to act quickly business-wise. So you operate more from a business standpoint on the margins. Like that luxury you don't have as the smaller banks.
Yeah, that makes sense. And you know, the thing that I hear speaking to a lot of big banks, right, is the risk. There's almost like I wouldn't say paralysis, but a deep concern because, you know, banking modernization is not new. It's been going on for decades and decades. And I think one of the stories certainly that we pick up a lot on the podcast is failure. You know, migration failure, you know, what have you, whether you said, I think quite rightly, start with something new, start with a new product. You see some banks starting with a new product. You see some banks doing, we're going to just do front to back transformation. What are the kind of things that you hear from bank boards around the risks that they see? What are some of the objections you get, and how do you guys at Skaleet try to manage some of those risks? So what do you say back to them about that?
I think this is really like the key point. Because in reality, and that's a bit of a humble views for all of the next-gen SaaS providers that we are, there is a huge paradox in this space. Everybody is complaining about IT. The amount of tech debt that is there is just enormous. Billions are sitting on more and more obsolete software. And at the same time, the pace of adoption has been relatively slow, all things considered. I think, you know, if you sum out the revenues of next-gen providers like ours, I don't think we exceed $500 million in revenue altogether. Okay.
Wow.
And at the same time, globally, banks are spending roughly 10%, between 5 and 10% of their revenue in IT. Okay, so that's about 650 billion, something like that overall. Probably 10% of that is core banking. So you are looking at 60-ish billion of spend in the domain. So what's preventing the huge migration to happen? And I think I speak a lot about the slow cooking description context. We've been cooking the lamb for a while, and now we are hoping to have a very nice lunch. And I think what stands really in between the opportunity and the current state is fear. And that fear is born by historical failures, as you mentioned. And I think also misperception of what the risk actually is.
Right.
And I think the first objection I have, and I try to put forward to CEOs, is like, okay, what is the risk of not doing anything?
Yeah.
And I think like when the time passes, the execution risk, in fact, is diminishing because technological progress are being made. And the risk of not doing anything, the risk of the status quo is ramping up to a point where the two lines cross, where it starts to make sense actually doing something. And that's the tipping point where CEOs are like, okay, now we need to do this.
This is obvious. It's something
this is obvious.
We need to do.
But they need to be really pushed in a way to some limit. I think, I heard a lot about, trying to articulate value proposition around cost and CCOs. That just doesn't work. I don't think like in critical B2B software, you can be really successful at selling.
It's cost out.
Just to cost out. I don't think that any CEOs are going to gamble a huge amount of capex and risk for some running cost reduction that they see on a slide deck.
Yeah,
I think that's just not
it
going
just doesn't
to be
sell
enough
anymore.
It's not enough. Now, if the regulators is showing up and say, hey, like, what do you do with all of this? You are not compliant with this. Why don't you do instant payment? We give you 6 months to do it. What about VOP? What about that regulatory report? What about DORA in terms of the pressure from the whole value chain control over IT? And so there needs to be a trigger for something to actually happen now, because that's the key point. Like what does drive really the change today?
Right now. And that's pressure.
And that's pressure from regulators. That's inability to execute. I saw some banks where you just lost experts. You don't have the COBOL developers you need. People are leaving.
Yes, that's right. They're retiring. I mean,
you are at a point where, well, we can't run this anymore.
Yeah.
So if we don't do anything, like in fact, we are just going to slowly die. So there is no alternative but to move forward. So that's a pretty extreme case, but I saw it with my eyes. That exists. I'm not saying we are there for the entire market, but some players are there. And it's for biggest banks, the urgency to act strategically. You can't be just looking at the Conto and you're like eating market share now at a pretty fast pace.
Yeah, you have to move.
When you start looking at bank records and you see just like salary, wage,
going
in and out.
Yes.
You see, okay, 2,000 pounds in, 2,000 pounds out to Revolut, and then you don't see anything.
Yeah.
So you lose control on the customers, you lose control on the data, you lose control on the relationship.
You can't make money out of that either,
right? You
can't
make money out of that.
Revenue.
You just end up with the cost of running those accounts at a pretty high cost to serve. And so your costs are stable, if not ramping up, and your revenue is going to decline at a time where the new customers are not staying with you. So it's
becoming obvious.
Huge problem.
Yeah. And you mentioned some things that you're seeing. Are there any case studies or examples that you can share about like what you've seen or what you guys have implemented recently?
Yes, absolutely. I think I'll give you one very recent example where a lot of big banks across Europe are also trying to expand across the continent to become much more of a pan-European play. And so therefore expanding their operations to adjacent countries becomes a priority. And therefore, the question for those CEOs becomes, okay, how do I do that? So we work for a big retail bank in France willing to expand to the Benelux. So the question is, how do I get started with a corporate banking activity within a year in a foreign country?
Wow.
that was the business challenge. So this is not
Great.
about IT. This is about like a business project. It's a business project, it's a CEO project. Now, how do you do that with the IT group tool? Well, you can, but in fact, everybody is busy. Well, you can, but you need to rewire a whole bunch of integrations quickly. The APIs are not necessarily ready. Well, you can, but the language is not necessarily set up to be multilingual in a given context. So in fact, you can and you can't, because it will take too much time, too much money, time and money that nobody really wants to spend for this. And therefore, you have to think about it differently. So what we did is combine a couple of software together for loans and payments, savings with Skaleet, and be in a capacity to launch a new bank, a subsidiary in a foreign country for a big banking group.
Nice. Wow.
And that's
in under a year.
Within a year.
That's incredible.
Within a year. And that's very new in this world.
And that is an example of what you said earlier on, something new. That is a
something
business
new.
case where you can take
business case,
new.
extend to another country. Quickly.
Yeah. Could there be other examples of, launching a new product or maybe going into a new segment or something like that?
Yes. Same thing. We work for a big bank conglomerate, which said, okay, I think there is an opportunity for us to have our own bank as a service activity. Why are we leaving that market to the Swan, the Solaris, and the like? We have a double objective. One is to have our own product factory to manufacture quickly, very digital products that we can sell in our network, as well as serve external distributors as a new line of revenues. Same thing. How do I do that with my historical providers? How do I do that with the IT that I have? You need to separate distribution from production. You need to have real-time APIs. You need to reconcile in real-time accounting with, okay, so in fact, you can't. You can, but you can't. And therefore, how do I do that? Well, I will ask people like Skaleet to do that within 6 months to launch that new activity. So it's more like same country, new business model, new tech stack, new backbone, and new revenues.
Brilliant. You mentioned Swan, actually, is very interesting, and also Solaris and BAS.
Yeah.
And it's a good question, actually. We probably should have covered this a little bit earlier, which is like the Skaleet business model and how in some ways that differs from some of the other providers in the market. Because I guess what you're saying is that BAS can also be very expensive. So you're outsourcing some of that, whereas you could just do it yourself. So maybe you could just spend a few minutes just describing how Skaleet actually works, like what it does and how it works with all of these other enablers.
Yes, absolutely. I think this is extremely interesting and an important point because there can be a lot of confusion in the market in terms of the alternatives available. So to be extremely clear, we are not a BAS. Which means we don't have a license. We are not a regulated party. Skaleet is a software vendor. So we sell technological backbone to distributors and banks. So what we do is tech and products that we sell, that we rent in a way, in a subscription fashion to those customers. Now, what's really interesting, in fact, relative to the BAS space is that usually what we see in the life cycle of corporates doing embedded finance or fintech companies, they usually start off as an agent of a BAS. They get started, they build a front end when they have the ability to do so. They rent both the tech operations and the license from a BAS provider, whether it's One, whether it's Trezor, whatever, Solaris, to a point where they start scaling up, and then the problems start to pop up. You have huge variable and linear cost that you don't really understand. You have limited fixed cost, but an economic curve that is less and less viable as you scale up. You have a black box effect, which is that you do not really control what's going on behind the scenes. And most importantly, you don't control your KYC, KYB, because in reality, the customers from a regulation standpoint are not your customers, but the BAS customers. And so when you onboard a customer and it says no, from a KYC standpoint, the only thing you can do is have a red card and say, hey, you can't be with us. And people are like, okay, well, why? Well, we don't know. So, and to a point where it's not sustainable, and therefore we are the next step to unlock profitable growth for those companies. So they exit their BAS. They usually have built very nice IT components from a software standpoint. Sometimes they have a bit of a back office. Usually, in most cases, they have very nice front ends. And we are really bad at doing good UX, UI. We are more on the back-end machinery. And they leverage our building blocks as part of the core banking, the whole thing or not. And we combine in a hybrid setup a new architecture for them to become autonomous. So they have their own license, they have part of our software and their own building blocks. And they go about scaling up a profitable growth journey with better customer experience, better economics, as well as a higher growth in a lot of cases. And I'm talking about huge impact. Gross margin wise, the latest customers we did that with, they just doubled their gross margin.
Wow. Yeah.
So roughly it's between 50% and 100% gross margin gain on a variable cost standpoint.
Oh, that's so interesting.
Doubling in some instances customer acquisitions because you can choose the IBAN you like, and that has a huge impact on conversion. And the autonomy from a customer experience standpoint is just huge. You have your own contact center, you can talk to your customers directly. So it's a huge gain and impact. So that's how we position relative to BaaS companies.
Yep.
Very interesting to see as well the life cycle of the fintechs, the waves and the vintage that we see maturing.
Yeah.
And in a way, only the winners, if you will, survive and end up working with us in some ways. And I think that's the beauty of what we do.
That's true. That POC, like the BaaS is the POC.
It's a form of a POC. Form of a POC.
That's where you come
now, in the embedded finance case, you may imagine it's slightly different.
Yeah.
Because those guys are corporate people. They are not financial services guys. And so therefore, they are a bit feared as well. They fear a bit about the regulatory constraints. So they might stick a bit longer with BaaS.
They might not want their own license.
They might not want their own license. But even on that front, we see a huge market switch. For instance, we work for SD-Works, which is a Belgium and pan-European leader in HR and tech services. So the HR cockpit for wages processing and paperwork. And they say, hey, why don't we do financial services ourselves? Why do we rely on bank for payments? Let's go into the embedded finance thing. And from day one, given the ambition they had, they said, okay, let's apply for a license first and just move forward. So their entire embedded finance play was thought as a regulated one.
Got it.
And therefore, it's a play for us to be as well relevant in the embedded finance journey.
As the cost of technology is coming down,
yes,
I guess you're saying that these fintechs, even some of the embedded finance providers, are basically saying, you know what? Maybe we should get regulated, actually, because it's not as daunting. And I agree with you. If you were making this call 5-7 years ago, it's very just like, no, I don't want to do this at all. I'm just exclusively going to work with a BaaS and we'll do rev share and it's great. But actually no. As you're proving it, maybe it is more interesting. Over time.
And in fact, I think a lot of people are also starting to understand that the whole value chain of financial services is pretty complex from a revenue and cost standpoint. And in a way, the pure direct cost of technology in the overall thing is nothing.
Yes.
In reality. So a lot of people, negotiating with us, what is the cost of your subscription? Well, okay, it doesn't really matter.
Yeah.
What matters is how many revenue per customer you can do.
How profitable.
And so if you leave close to 100% of interchange fees for cards to the BaaS, if you can't replace your cash at Eonia plus, given the interest rate level, your revenue per customer is going to be divided by 2 at a minimum, if any. So that's what you need to think about. It's not really about the cost of technology, because there are so many costs elsewhere from end to end.
It's about
that's not the topic. It's about your business
customer.
plan. What does your business plan look like?
Yeah, that makes a lot of sense.
And how do you shape it with unit economics that makes sense?
Amazing. And this is a bit of a segue into the kind of the last segment of our conversation, which is to talk about like what happens next and what you see grow. I mean, do you see that maturing, that fintech graduating out, being a growing sector within the banking sector, or a growing share of the types of business that you have? Or like what does a future customer look like for you? Is it more of the same, just more scale, or does it change a bit?
Yeah, I think like the phenomenon which we've just described is going to accelerate as both embedded finance and disruptors in the financial services space are gaining speed. And more of them are going to exit BaaS or even start from scratch as regulated entities. And I think that's a huge opportunity for us to accelerate on that segment. We are going to grow with them as well. So we really like tie our growth trajectory with theirs. And I think that's extremely powerful.
Awesome.
I think like the whole make or buy kind of decision-making framework is starting to shift as well. like 10 years ago, everybody's saying, okay, let's rebuild the whole thing out. Let's build the accounting stuff, let's build like payment, let's build everything else. Now, mentality, state of mind is shifting as well a bit, saying, okay, why nobody's rebuilding Salesforce, if you will. Okay, nobody's saying, hey, let's rebuild SAP and then we'll build our front end. Like nobody's doing that. I think for core banking, it's the same shift is happening as well. How can I buy some utilities that will be a fast track for me to focus on what matters in my business? I see a lot more of that. And then on the other hand, like the pressure that those disruptors are putting on the banks is just going to be stronger and stronger, while the IT situation is just going to be worse and worse.
Mm-hmm.
And that is going to drive tremendous demand as well for software like ours. And so in a way, being at the crossroads between disruptors and banks is really an interesting positioning for us, because we can really help the banks catch up, while in a way we are helping the disruptors scale up. And so, and the reasons why disruptors are working with us, because we bring some banking expertise from product standpoint as well. And the reason banks work with us is because we are just the accelerator that they need in order to fight in a way against the disruptors. And there are also a lot of competition going on. Like it's not necessarily competition. It can be like a combination of a whole bunch of collaboration and partnerships. And we want to be just at the cornerstone of that ecosystem. That's what we do.
It's amazing. It's such an exciting time for you guys. And I want to end this talking about you. So you said 18 months now in role.
Yes.
What's one thing you can share with our listeners and viewers about something you've learned as a CEO, as a leader of this business?
Yeah, that's an interesting question. I try not to do that too much at night, otherwise I don't sleep. But I would say probably the biggest mistake I've made at the beginning is trying to do too much of myself. When in fact, when you run a company of 130 people that is growing pretty rapidly, it's really about your team.
Yeah.
So it's a bit obvious, everybody's talking about that. I've been fueled by, I read books and I spoke to board members and, I've been around like, oh, it's all about talent, blah, 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 blah. And in fact, the moment you enter the company, you just don't do that.
Of course, yeah.
Because you're just drawn into making so many things yourself, and taking a step back and say, hey, what does my talent book look like? How do I think about my culture is extremely important. And I think like the cultural vector is absolutely important. And there are two sayings that I have in my mind, and I try to remember that. It's a bit brutal in a way, but I think like culture is really about who you hire, who you fire, and who you promote.
Oh, I love that.
And that's what people are going to look at. And then I said to my guys, hey, your job is to be HR directors, all of you. That's your first job. You need to think about HR behaviors within your teams. And there is a saying that I love as well, which is that 7 hire 6 and 8 hire 9. So the moment you start having A players, they will hire people who are better than themselves.
Yes.
And I think as CEO, I find my role as being head of HR, if you will, and setting up cultural vectors and a framework for that to happen without having for me to intervene in each and every detail. And I think that state of mind has been shifting for myself after a few months of battlefield kind of combat. That's the way I look at things.
That's amazing. Helping them be successful in their careers helps you be successful, helps the whole business successful. That's fantastic advice. Amazing. Thank you so much, Martin. Okay, everybody, we're coming to the end of the show. Where can people find out more about you and everything you're up to?
Skaleet.com. Pretty simple. And we are also pretty active on LinkedIn, myself as well. I try to reflect a bit on what I see in the financial services space. Not as good as what you guys could do, but we try to be a bit alert on what's going on. Amazing. So people can follow myself or the company on both LinkedIn and our website to have a bit more insights and content.
Awesome. Right. That's all we have time for. Make sure you follow 11FS on LinkedIn to stay updated with all of the cool stuff we're doing. And if you enjoy our show, do subscribe to the 11FS YouTube channel, where you can find all our previous episodes. Thanks so much for tuning in, and goodbye.